I'm a buyer today. I'm buying stocks, adding to my positions in Google, Facebook, and American Express. I believe these are all stocks of the future. Particularly American Express is more of a trading opportunity. They're down some 45%, and I think they were down again another 3% today. And I believe American Express is going to come out on the other side of this, a strong company, and you'll start charging again, whether it be on American Express, MasterCard, or Visa. So I think they're just a victim of the current crisis, and that presents me an opportunity to make somewhere in the neighborhood of 30% on my money in probably the next 3 to 6 months. So I'm a trader. The other thing I bought today was IBM. IBM has really recently not had an identity. It is not one of the FANG stocks. It's not something that has hit new heights. They've lost their identity, but they're restructuring themselves to be very active and very predominant in both quantum computing and artificial intelligence. And if you've seen any of my videos in the past, you know this is something I believe is a big part of our future, particularly as we come out of the virus crisis. I think the healthcare system is going to be restructured. We'll move more towards preventive medicine, and that is to say, through technology, constant monitoring of our bodies. If you think about it, that's what medicine is. It is the monitoring and the making work of our bodies. I had a doctor one time say that I am basically the same thing as an auto mechanic, except when I'm done with my work, I can't take it out on the highway and drive it. And that's what a doctor is. What I think is going to happen is the same thing that happened to our cars. We have 5G almost on our cars that tell us when our tire pressure is low, tell us when our gas tank is low, tell us when our battery is low, tell us when our engine needs to get into the shop to be serviced. That's a big change that has happened in the automobile industry. You had to listen to your engine. I remember the times when you had to raise the hood and put your ear to the engine to see if maybe there was something wrong. We have moved away from that. We have moved towards technology telling us when something is going wrong in our car before it goes wrong. And I think that's exactly what's going to happen within the medical industry. Technology, as a result of this crisis, will move in, and with the aid of 5G, they will monitor our bodies through the cloud in artificial intelligence. Then we'll show what's happening in our body relative to millions of other people and what's happening in their body. So I think it's fair to say that the medical industry is going to catch up with the auto industry, and we'll have constant monitoring of our health. We'll do that through our phone for the most part, and through 5G. We'll have a smart toilet that will analyze our poop and our pee on a daily basis. We'll have a smart toothbrush that will analyze our saliva on a daily basis. We'll have the ability to prick our finger so that our blood can be tested, maybe once a week or whatever. And all this information will go into the cloud, and it will be analyzed through artificial intelligence. And this is why I bought IBM, because they are a leader in that. Now, if you think about that, that's a tremendous amount of data going into the cloud, because if we adopt this, certainly every place else in the world is going to adapt it. And so you've got a tremendous amount of data, which is a plus in that I have all these people I can compare to. And if we go to the extent that we also bring in past health history and all the data that our doctors and our hospitals and our dentists and everybody have, and we connect all this, it's going to be a tremendous benefit to the individual. Now, there's going to be some privacy issues, but I'll leave that to somebody else. I believe then the issue then becomes, with all this data, how do you slice it and dice it and compare it and get it back to Carrie instantly to tell him what his next step is? Like it says on my car, get me into the shop, and my phone will say, Carrie, get into the doctor. That's what's coming. That's why I bought IBM. That's why I bought Google. That's why I bought Apple. And that's why I'll continue to buy the. Along that same line, that's why I own Facebook. I've gotten some questions relative to mutual funds. I don't buy mutual funds. I don't buy ETFs, and I don't buy index funds. Basically, because for the first element, when you buy a fund, you're getting the good, the bad, and the ugly all in one container. With mutual funds, you're getting active management. Well, you're going to pay for that. You're going to pay somewhere in the neighborhood of 1 to 2% over the lifetime of the fund, or per year on the fund. Well, over the lifetime of the fund, that becomes a lot of money that you're paying someone to actively manage your fund. Also, within a mutual fund, you're getting maybe 90, maybe 200 stocks. Well, there aren't that many good stocks that I want to invest in. So I'm willing to put in the work and decide which funds or which stocks I want to invest in. The other thing I had never liked about mutual funds is they only trade once a day. They trade at the end of the day. The manager goes in and says, okay, these are my trades. And so if he does that on a Friday and the market takes a dive at the end of the day, you get the bottom of the price for that day. As far as exchange traded funds, they're more passive. They're quite often controlled by a quantum computing. That is, that they have an algorithm that does their trading for them. So you don't have as much of an expense, but you do have an expense. Index funds, you're just buying the index. So if you buy the NASDAQ index, you're buying pretty much the high-tech stocks that I might like, but you're also buying some that I don't like. You're buying some what I call zombie stocks, Netflix being one of them, a very good company providing a tremendous product, but they have yet to make any profit. So I'm not really interested in owning a company that is still in its infancy. I want to own a company who is mature. It's got a good balance sheet, so that when things like this happen, and I hope it never happens again, I'm not a victim of it. I'm not worried, do they have enough money to make it to the end of this? We're talking about 18 months before we have, 12 to 18 months before we have a vaccine. There are going to be a lot of companies that just aren't going to be able to survive. And as a result of that, they're going to be gobbled up by the companies that have deep pockets. So I stay away from them. The other thing I do is I do most of my trading within my and my wife's IRA. That being such that I don't have to pay capital gains tax if it's sitting in my IRA. Now, when I have to take my required minimum distribution, I'll sell the stock, and that thus realizing the capital gains within the IRA, thus not having to buy them, move the money into our joint account, and then buy the stock right back. So any past capital gains, I don't have to pay capital gains tax on. That's the way I trade. Now, I also recognize that some of you don't have the amount of money that I have. So Google and Amazon, you feel are out of your reach. In that case, I would look. If again, you only got $200, $500 to spend, I would look at an ETF or an exchange-traded fund. Probably I'd buy the NASDAQ, the NASDAQ ETF, yes, and or index fund, the NASDAQ index fund, and that way the bulk of my money is invested in those larger stocks. But then look at the ETFs, see how they're made up, and you make that decision. I'm not going to tell you which way to go because I don't do that. I buy stocks. Now, it used to be that people would say, well, within a mutual fund or an exchange traded fund, you don't have to pay the commissions every time you do a trade. Well, if you go to E-Trade or some of the others, you don't pay a commission anyway. That's a thing of the past. You don't even pay a fee. So I buy stocks. That's how I trade. That's why I bought today.